Welcome to this Thursday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have Mike Baudendistel giving us a rail and intermodal update. But first we're going to go to Zach Strickland with the carry update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Thursday carrier update presented by our good friends at PowerFleet. So, outbound tender volumes starting to rise as we've talked about earlier in the week. So we're seeing kind of this long running trend line of increasing outbound volumes as we close the month of February. If you look at the green line here, this time last year, a little bit more of an angle on this increase in terms of just volume spiking at the end of the month. We had a lot of activity really surge in here. The shippers all of a sudden said, whoa, 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 we got to close out the month a lot faster than we are. This year we're seeing a little bit more of a nice running trend line versus last year, so not as sharp of an increase. Again, these type of increases are a little bit better for capacity in the market in terms of really kind of mitigating the impact to the overall volumes and making sure that the supply side is covered. So we're roughly, we're right about on par with this time last year, regardless of the trend line angle if you look at it. So not a lot of variance in the overall volumes, so nothing to be concerned about right there right now. But looking at the overall freight market, behind me I have our outbound tender volume index for the tree map of the outbound tender volume index. You see a lot of green on this map. This green means that is a weekly increase in tender volume. So just about, I think we have roughly about 70 to 80% of the markets are showing some form of increase in volume in the United States. So not terribly unusual for closing the month out with an increase in volume, but some of these markets are pretty significant in terms of overall increase. The one that I'm going to really focus on today is the Ontario, California market. A lot of talk about the coronavirus going on right now, and this is going to be one of the most impacted areas of the country if the coronavirus does fall through. We have a lot of, we're going to have a rail volume update here in a few with Mike Baudendistel, so stick around for that. But that's going to show the signs of it first, and then we're going to start to see that bleed into the truckload market and the truckload sector, which is what this is focused on behind us. So 9% week over week increase in tender volume in the Ontario market, which is the second biggest market in the United States. If you look at these absolute values right here, we got a 348 for Ontario, a 404 for Atlanta. Again, second biggest. It was the largest outbound market in the United States last year, for the majority of last year. So things have changed a little bit there. Diving a little deeper into this Ontario market, you can see that in early November, volumes just fell off a cliff. We've talked about this before. The trade war diminished, not as much activity coming off the West Coast. A lot of these shippers had overheated volumes. This is really more of a return to normal. If you look at 2018 volumes, Ontario was not this active in 2018, which is of course the year that everybody thinks is so robust and so active. Actually, Ontario, Southern California drove a lot of the freight market activity in 2019. Again, a lot of carriers knew that, a lot of shorter haul volumes moving around the country there. But right now, since we are living in the present, we are looking at this market in particular over the next couple of weeks, just to see if we do see any inherent signs of volume decrease because of Chinese New Year, which of course is timed out about now. It should be hitting and being in full swing in terms of hitting overall freight volumes. Not an impact to tender rejection index, however. So capacity itself is still relatively loose in that area. Now, looking at some of the other markets out there, the San Francisco market, for instance, again, a pretty backhaul market, I should say. The volumes there increasing as well, but tender rejection rates are jumping up on the San Francisco market. So again, not a lot of signs of coronavirus. This volume increase did take some of those carriers off guard a little bit, however, so capacity is tightening a little bit there in that market. So again, coronavirus impact not totally prevalent yet, but we are going to watch these markets over the next couple of weeks to see it. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to your Rail and Intermodal update. I'm here with Mike Baudendistel. Mike, what do you have for us this week?
So yesterday the AAR came out with their weekly rail traffic numbers. So for week 8 and for the North American market, down about 7%. If you look at the past 4 weeks and compare that year over year, that's down about 2%. Now we have this in a sonar chart, and this is the time of the year when you usually would start to see a little bit more pickup seasonally in rail traffic overall. You saw that the last couple of years, and here it's been really just sort of a muted increase. You see it's still lower than it was a year ago level. It's been trending sort of flattish. When you look at that on the commodity by commodity basis, some of the usual suspects are down. I mean, coal, of course, a big drag. Grain is a big drag. The one area that's higher year over year is petroleum. Petroleum's up about 20%. That's probably going to be the one commodity all year that's higher for the railroads due to some new service agreements and those things. Chemicals is also up. But it would say in general, rail traffic is telling us there's not a tremendous amount of improvement in the industrial economy.
Gotcha.
So this next chart, I've talked a lot the last few times I've been on FreightWaves Now about the Canadian blockades.
Right.
So this goes into a little bit more detail there, and maybe it's just kind of an update. On the left, we have from Prince George, which is, you basically have to go through Prince George from Prince Rupert, and there in Western Canada, the blockades were shut down after about 5 days. So disruptive, but you see how it fell down here and quickly shot back up pretty quickly. It's been a different story in Eastern Canada, where you see this is a Halifax chart, and you see how that has fallen down, and it's been multiple weeks where that's been lower. The protests in Canada in the east lasted about 2 weeks, and they were just finally shut down overnight on Sunday night into Monday. There have been some that have been popping up across Canada, so Canadian railroads are hoping that that's not going to be a recurring thing. And there has been some traffic that's been sort of pretty expertly diverted from Canadian National to other railroads to keep supply chains moving. But it still is going to be multiple weeks before supply chains are really back up and running again. I mean, these are network businesses. There's lots of delays at places like Macmillan Yard in Ontario, where you've basically seen a doubling of how long those rail cars are stuck in that yard.
Gotcha.
So this next chart, we get into intermodal, and this sort of piggybacks off of what Zach was just talking about, where on the West Coast, there's this concern that blank sailings and fewer imports is going to just really be a persistent problem. This is what the data is showing so far. So really, it's been sort of a tale of two markets, where domestic intermodal from LA, the domestic intermodal, these are 53-foot containers, those have been pretty solid. But you see on the international side, these are the 40-foot containers coming through LA, and those have really fallen off by about a third. They're usually, international is usually about half the market, but now it's about 1/3, below that. I think it's a little too early to say this is a smoking gun, that this is a coronavirus and blank sailings. Chinese New Year was late January, so usually you see the volumes drop off 2 to 4 weeks after that.
Okay.
We're now about 4 weeks after that, so normally you would start to see pretty quickly those volumes start to return. Haven't seen it yet. It's gotten worse. So this is one thing that we recommend, looking at closely are 40-foot, containers, because that's really where most of the rails are most concerned, is the international intermodal volume. So those are the intact, boxes going on 40-foot containers on behalf of the shipping lines. So really a tale of two markets here on intermodal.
Got you. So definitely an area to watch over the next few weeks.
Absolutely. Yep.
Excellent. Mike, thank you so much. I appreciate it. And thank you so much for tuning in. That's going to do for this Thursday edition of FreightWaves Now, but the content doesn't stop here. We're always streaming around the clock. So check us out on our FreightWaves TV app, available on all your favorite streaming platforms, including Apple TV. And if you're looking for more deeper dives into all the latest industry trends and access to all of our world-class industry events like FreightWaves Live in Atlanta, check out our Passport program for more information. Feel free to reach out to us. Thank you so much for checking in with us today, and we'll see you on the next episode.
Is the trade war back on?
Trade war.
Trade war, full-blown trade war.
15% tariffs on $112 billion worth of goods.
Hours earlier, China announced tariffs of 5% and 10% on U.S. products.